Hey guys, it's Andrew Keene from KeenOnTheMarket.com. This is your unusual option activity report for February 7th, 2012. We did not get that much activity that I traded today. I didn't think the paper was that strong. I'd like to trade a very strong paper. I don't necessarily like to trade in-between paper. 2013, 2014, it's hard to get a gauge if they're bullish or bearish. It could be tied to stock or versus stock. So I don't trade a lot of those. So a lot of the activity today I thought was pretty weak, so I did not trade a lot of it. But let's start going through it. We'll start at BX, Blackstone Group. When stock was trading 1682, customer came in and he bought the January 2013, the 1520 call spread for $1.31. As we can see, if Blackstone expired at 1683 on expiration January 2013, the spread would be already be in the money. 15,000 of these traded. It was 7.4 times usual volume. I think this is a bullish spread. However, we don't know what a customer stock position is against these spreads. That's why a lot of times when spreads go across the tape, I don't take them on. So I would think this is going to be a more neutral trade than I do think it's going to be a more bullish trade. So I didn't take this one on, but I think this is more neutral, and that's why I didn't take it on. It looks like we're might be topping out here above the $17 level, or we could have a breakout. Here's our trend. So I did not take this one. I would say this is a neutral trade. Next one, SYY. I flagged this one the other day, and the paper has been very good in this one. We flagged it when the stock was trading around $29.96. The customer came in and bought Feb 31 calls for 10 cents. Stock rallied really hard. I bought the March 30 calls, and I sold them out. I made a nice profit on them. I think I made about 35%. This is all on the blog. You can go to KeenOnTheMarket.com and search. We have a search feature for SYY. Today, we saw some selling activity. They did have earnings. Earnings were weak. I'm glad I got out of the trade before earnings. I don't like to hold a lot of positions into earnings unless they're specifically for an earnings play. Stock was trading $29.17. Customer sold the Feb 29 puts and also bought the Feb 30 calls. So these were both very, very bullish trade. A little light bulb goes in my head. Selling puts, buying calls, bullish activity. I want to get long. What's a good way to get long? I bought the Feb 29 calls for 45 cents. Stock rallied. I ended up selling 25% of my position for 60 cents. Took a nice 35% gain. I don't like to trade a lot of February expiration. These things just decay away. If you have something that's 20 cents a premium, every day that it goes without it being in the money, it's just going to decay away. So I took a little bit of profit, but I think we can get more upside to this $30 level where I'll take out the rest of my position. So this is very bullish activity. This was the only trade for unusual option activity I took today. In Allstate. It's kind of interesting to me because I didn't see this one happen till the end of the day. So customer bought the February 29 calls for $194, 5,200 of these when stock was trading $30.88. So at the high of the day, this is bullish activity. But once again, open interest in Allstate is very high. You don't know customer's position, stock position against it. If we add up the call price, $1.94 plus the strike price would put you at $30.94, and if they sold stock at $30.88, they could be synthetically creating a 6-cent put. So I don't take anything out of this trade as well. That's why I did not trade it. MTG, this one comes across the tape a lot. This trades a lot, and I did not take this trade as well. When stock was trading $4.52 on basically the high of the day, customer bought 9,900 of the March 4.5 calls for 50 cents. This is 2.3 times unusual option activity, and we saw it sell off. I actually was going to go buy these calls. They were sold off to about 43 cents, and I decided against it. And part of the reason I didn't take this trade initially was I've seen MTG trade a lot, and the paper isn't very clear if it's bullish or bearish. So when it's trading 452, a lot of time what customers like to do is they like to buy calls and sell stock against the calls. Because as stock goes down, the volatility and the calls stay high, then they get all the advantage of the short stock. So it seemed like it was topping here. That's why I didn't put this one on. Didn't have a breakout above this high, 460. So customer could have stock against it. We don't know. I didn't take this trade. I don't like to trade the stock. There's certain stocks I like to trade, and there's other ones I don't. This is one of the stocks I don't like to trade. OCZ, when stock was trading $9.72, customer bought the June 10 calls for $1.25. Once again, all these charts look very similar. They're approaching the top end of either a range or pattern, and like this one, we're breaking up. Couldn't get through $10 today. Was selling off, traded 972. A lot of times, like I say, they buy calls. They could be selling stock. They could be buying gamma, which means they're buying calls and puts, creating gamma because the VIX is so cheap. So I did not take this trade. I didn't think it was that bullish or bearish. Like I said, SYY was the one where the light bulb went off, and I'm like, ooh, this is a great trade. I need to get in it. We bought him at 29 here. We bought him at 29 again today. I think we can get to 30 in the next couple of days. This is a February position. So I only have 8 trading days left. So I'm looking to get out of this one very quickly. I paid 45 cents in calls. The most you can ever lose when you buy an option is what you pay for. But these 45-cent calls could go, in theory, to a couple bucks. One more I want to talk about today was Disney as the earnings trade of the day. If you look at it on the daily chart, I thought it was going to go off to the races. Got up to $44 in May. We look at the May highs, it was $44. This is when the SPOOs hit $13.71. I thought Disney was going to have a stronger earnings than it did. It sold off a little bit. I bought the March 41.43 call spread for 70 cents. At the end of the day, I actually closed at 83 cents. The stock rallied 1%. I put on the trade at 40.65. Disney sold off, and as I watch it going across the tape, it's trading around 40.50. So I have to think about it tonight. What do I want to do? Do I want to just sell this call spread out, and move on? Do I want to leave it on? Do I think the market's strong? Do I think it's weak? There's a lot of factors. I'm going to, see what I can get for the call spread tomorrow. If I can get around 70 cents, I'm going to sell it out, and I'm going to move on to the next trade. I thought it would rip a lot higher. Sold off down to about 40 in after hours, and now it's trading around 40.50, which is around the level that I got in. So I paid 70 cents. If I can get out for 65, I'll take the nickel loser, and I'll move on. This is Andrew Keen from KeenOnTheMarket.com. Sorry this one was very, very long. Trying to help you guys distinguish paper order flow, how to read bullish and bearish activity, neutral pattern, why I take certain trades and not other ones. Have a great night. We'll run it back tomorrow.